and welcome everyone to ETMarkets CryptoMeet. The cold hard cash in your wallet has for generations defined what money is to us. But with the advent of cryptocurrencies and other digital forms of currencies like the CBDC, money is undergoing an epochal change of identity. Will money mean the same to us as it does now? Will the digital form of money change the way we invest, save, or spend it? And what role will money have in the metaverse of the 21st century? To understand these complex issues, we have with us Professor Eswar Prasad, a senior Tolani professor of trade policy at Cornell University and a senior fellow at Brookings Institution, joining us virtually. Professor Prasad's recent book, The Future of Money, is perhaps a Bible for those who wish to understand what digital money is, what the future holds for the medium of exchange, and what impact it will have on our society. Welcome to the ETMarkets CryptoMeet, Professor. To begin with, I would request you to please share your views on the topic of the day and enlighten our viewers of what your view is on the digital currency and crypto universe.
Thank you for that kind introduction, and it's a pleasure to be part of the ET community, which I've admired from afar for a long time. We are certainly at the cusp of some dramatic changes in the nature of money. Now, digital payments, of course, are nothing new, even to a country like India or other middle-income countries like China and Kenya, where cash is increasingly giving way to forms of payment that are electronic and that are largely intermediated through our mobile phones in the palms of our hands. But what is striking is that we are now at the cusp of a revolution that has been started, of course, by Bitcoin. And that, I think, is going to take us a very long way in terms of transforming money as we know it. Now, Bitcoin came right after the financial crisis broke out in the US, and it came with a very alluring idea of allowing people to conduct financial transactions without the use of central bank money or relying on a traditional financial institution such as a commercial bank. And the timing was very propitious because right after the global financial crisis, trust in governments and in banks and other traditional financial institutions was at a very low ebb. So the idea of being able to use what is effectively a decentralized medium of exchange, that is one that is not intermediated by any central trusted third party, and that would allow you to conduct your transactions using just your digital identities, that was a very alluring proposition. Now, in its early days, Bitcoin was used largely to finance illicit activities of various sorts within and across national borders, but that use has petered out over time. And more importantly, Bitcoin has not delivered well on its fundamental purpose. Now, Bitcoin, of course, is very volatile value, but in addition, the network cannot process a large volume of transactions, at best a handful per second compared to millions on many other payment platforms. In addition, it is somewhat slow, a little cumbersome to use. So Bitcoin has instead become what it was not supposed to be, which is a pure speculative financial asset. Now, one might ask, where does the value of Bitcoin really come from, given that it doesn't seem to serve any intrinsic purpose? Now, by and large, devotees of Bitcoin and other cryptocurrencies seem to believe that scarcity is the true value proposition. If you think about a fiat currency issued by a central bank, say by the Reserve Bank of India or the US Federal Reserve, these central banks can print their currency at will in basically infinite quantities. Bitcoin, by contrast, is limited to at most 21 million, and about 19 million have been mined so far, and it is created at a very set schedule of 1 Bitcoin roughly every 10 minutes. Now, to an economist, this is a slightly dubious proposition that scarcity alone can create value. But certainly at a time when investors around the world, particularly in the advanced economies, are very eager to find financial assets that might provide a hedge against inflation, that might provide decent returns, Bitcoin has gained a lot of traction as a financial asset. And many other cryptocurrencies like Bitcoin have done the same. But again, it is something worth thinking about and perhaps worrying about, that the entire value of Bitcoin and such other cryptocurrencies seem to be built largely on investors' faith, which could turn out to be quite fickle at times. Now, while Bitcoin has not worked well in its stated purpose, there are other cryptocurrencies that have come up that try to fill in the gaps left by Bitcoin. There is a new breed of cryptocurrencies called stablecoins that get their stable value essentially by being backed up by stores of liquid securities denominated in those fiat currencies. Now, stablecoins, I think, are likely to get some traction because they're fulfilling a fundamental need in many economies for good, low-cost digital payments and good cross-border payments as well. Cross-border payments, that is across countries, still remain beset by a lot of inefficiencies in terms of speed, the expense, the difficulty of tracking them in real time. So the prospect that stable coins might help get around these problems is certainly an attractive one. Now, given all these developments in money, central banks have not been staying idle. Many central banks around the world have begun experimenting with digital versions of their own currencies, which are called central bank digital currencies, or CBDCs. Now, there are different motivations at play in issuing CBDCs. In some countries, the objective is to broaden financial inclusion, that is, give virtually the entire population easy access to a low-cost digital payment system without necessarily having a bank account or a credit card, although a CBDC itself could become a portal for basic banking products and services. In some advanced economies like Sweden, the motivation is quite different. In Sweden, the private sector is doing a perfectly good job of providing low-cost digital payments that everybody has access to. But the Swedish central bank, the Riksbank, wants to make sure that the entire payments infrastructure is not in the hands of the private sector, and that in fact, you can have a backstop in the form of an e-krona or a digital kroner in case the private payments infrastructure should face any technological or conference issues. Then there is China, where a different set of motivations is at play. China, like India, has done very well in terms of providing digital payments to a large fraction of the population of the country. Unlike in India, the government has not played a direct role so far. There was a regulatory void that was filled by two very large payment providers, Alipay and WeChat Pay, which have done a fantastic job of blanketing the country with low-cost digital payments. But it comes at a cost. Those two payment providers now dominate the payment space and are not making it easy for new entrants who could come in, provide competition and further innovation. In addition, the Chinese government is very concerned that these two large players now have access to a lot of data that they're not willing to share with the government and that they will reasonably enough exploit for commercial purposes. But whatever happens with these, it's clear that around the world, we're going to see central bank digital currencies beginning to coexist with cash. And I think as we all get used to the convenience of digital payments, ultimately it's going to give way to purely digital forms of payments rather than just having cash. This has a lot of benefits. For consumers, it's very good to have access to a digital payment system that they have easy access to. For businesses, it's very good because it reduces the cost of transactions. Even street vendors don't have to deal with the hassle of managing cash. They don't have to worry about loss or theft of cash. But there are some concerns. One concern is that if the government itself starts providing a payment system that could compete with private sector payment providers, moreover, there is a concern that if you have central bank digital currency or CBDC accounts easily available, people might shift deposits from the commercial banking system to central bank accounts, thereby putting the central bank in the position of allocating credit because commercial banks might start playing a smaller role. I don't think these are very likely to happen because there are design and conceptual choices that are coming up to solve some of these problems or at least mitigate them. But the reality, I think, is that the end of cash is fast drawing to an end. Is this all going to have an implication for the international monetary system? Could a digital version of the yuan rival the dollar? I think not. Maybe as a payment mechanism, if you had easy access to the digital yuan around the world, maybe the Chinese yuan could become used somewhat more as a payment currency. But ultimately, the dollar's role as the global reserve currency is determined by the fact that it has very strong institutions backing it up. An independent central bank, an institutionalized system of checks and balances, and the rule of law. And China has shown no indication it plans to move in this direction. There are other concerns related to privacy, which might be lost if we move to a world with just digital payments. I think, in fact, India is taking a very sensible approach to these issues, providing biometric forms of identity that everybody in the population has access to, and more important, in the form of the UPI, the Unified Payments Interface, providing a payments infrastructure that the private sector can then innovate on top of. And that, I think, is going to be an exemplar for many countries around the world. And the fact that the Indian government is also thinking of having data aggregators who would essentially allow consumers who ultimately own the data to control who sees the data and how that is used, that I think is going to serve as a model for much of the world. So to sum up, I think we are really facing some very significant changes in the nature of money, which I think ultimately is going to lead to a bifurcation of the roles of money. I can well see some forms of cryptocurrencies, perhaps stable coins issued by various commercial providers, including perhaps big corporations like Amazon or Facebook, gaining traction as mediums of payment. But my sense, at least, is that as stores of value, the existing fiat currencies will continue to play a dominant role. But certainly as an economist, what I can say is that competition, even among currencies, is usually a good thing, so long as there are guardrails in place to make sure that that competition doesn't prove destructive or end up in some big players dominating the space. But certainly all of us are going to move to a world where we will largely be using digital payments, which is going to have a lot of benefits for us as consumers and businesses, but might also end up in a society where ultimately we lose whatever vestiges of privacy that we currently have.
Absolutely, absolutely. Thank you so much, Professor, for that 30,000 feet view of the entire dynamics around the digital currency space and the cryptocurrency universe. We have got a lot of questions from our viewers, and I have also a few questions lined up for you. But I'd like to start off with something that's very basic, and I'd like to dwell on your own experience around this. What is better, cash or is digital avatar, e-cash?
Now, there are many benefits to digital payments because, as I mentioned, for businesses, they don't have to deal with just the hassle of managing cash, making change, and so on. And in addition, for both consumers and businesses, carrying cash around, has issues related to loss and theft. From the government's point of view, there are many advantages to moving to digital payments. Activities that are intermediated using cash often escape the tax net. So you bring a lot more economic activity out of the shadows and into the tax net. And the government may consider it a good thing. Maybe some people don't consider it such a good thing. In addition, the use of government provided money to finance illicit activities, both within countries and across countries, for drug trafficking, money laundering, and so on, that is certainly going to be mitigated. In India, we had the demonetization episode, which was well-intentioned, although perhaps not executed as well as it could have. And part of the idea there was to limit the use of cash for corruption. Now, removing cash is not going to eliminate corruption by any means. There are deeper forces at work, but certainly cash fuels at least petty corruption. So I think anytime you move to digital forms of payment that are going to leave a digital trace, it might lead people to think twice or thrice about using cash for illicit transactions or for corruption-fueled activities. But cash has many attractions for people who may lack access to digital means of payment, who don't have digital connectivity. Perhaps cash is still useful. If we were to face, an apocalyptic scenario, such as a total communications breakdown or an electricity breakdown, cash is going to come through in a pinch. Although I've written a book, The Future of Money, I must confess that I still tip my Uber drivers and coffee baristas in cash because, it has this tangible element that I think creates a personal connection. But I think the reality is that we're all going to ultimately give way to digital forms of payment because of all the benefits. And it's going to come with at least some costs, including the fact that anything digital ultimately is going to leave a trace. And even if there are technologies that give you some degree of privacy, the reality is that no central bank wants its money to be used without auditability and traceability of transactions. So just the prospect that any transaction can ultimately be traced in terms of the identities of the transacting parties, whether we want to live in that world is a thing we have to approach very carefully, not just from an economic or technocratic point of view, but also think about it at the level of society.
Right, right. You talked about tipping your barista coffee or Uber driver with cash, and that led me to think about a very interesting thing that I don't know how much economists have dwelt into. That is on the saving and the spending pattern. When you have cash, when you have the tangible cash, you somehow feel a little reluctant to spend it compared to when you have it in your digital version, in your credit cards or in your debit cards or whatnot. So do you have any thought process into, whether having digital forms of currencies would also alter our saving and spending patterns as human beings?
Now, that is certainly true. In fact, there is a section in my book in chapter 6 where I talk about this fact that cash does encourage thriftiness. And there is some evidence to this effect that if you're using cash for a purchase, as opposed to a digital form of payment, especially a credit card, where the pain of a transaction comes later, that psychological pain associated with using cash relative to a digital form of payment certainly makes people less eager to spend when they're spending with cash. Now, one interesting thing to note is that over the last 18 months or so, when we've all been through a very difficult period as a result of the COVID pandemic, one curious thing happened in many economies around the world, including in India, including in the US and many others, that the holdings of cash actually went up, even though the use of cash in payments went down. Many of us have been switching to contactless payments. Here in Washington, DC, many of the places I go to have essentially stopped accepting cash, and they've persisted with that pattern after the pandemic. And yet, the amount of cash in circulation, or so to speak, in the US has gone up. So people seem to be holding on to cash because they view it as a very viable and important store of value in these very tumultuous times. So I think this tangible element, which is true of not just cash, but other physical assets like gold, the notion of having gold jewelry or a gold ingot or even a gold coin in your hands, I think makes it an alluring asset. But even there, as you can see, people are shifting away towards putting their faith in purely digital assets, which they can never get their hold on. So I think we're all beginning to develop a new mindset towards things digital rather than things tangible.
Right. So when people usually talk about digital currencies, the first image that comes to mind is that of Bitcoin. And however, Bitcoin itself is undergoing an identity crisis that you also touched upon in your opening points, wherein as true believers still see it as as the future of money, whereas others only see it as a store of value, but having no currency functioning. Where do you stand on this entire debate, and how do you see the future of Bitcoin going forward?
Bitcoin is proving to be an unviable medium of exchange for the reasons I laid out earlier, and I don't think that's going to change anytime soon. Now, one of the difficulties of Bitcoin is actually something that was behind the origin of Bitcoin, which is the way in which transactions on the Bitcoin network are validated. At some level, Bitcoin is a technological marvel. I mean, the notion of being able to conduct transactions without knowing who exactly you're transacting with, because you see only the digital identities of the transacting parties, and being able to do this without a trusted third party intermediating those transactions is really quite remarkable. But the way in which transactions are validated on the Bitcoin network limits the amount of transactions that can be processed by the network, because the validation process is very computing intensive. And that essentially means that we're not going to get much scalability of Bitcoin as a medium of exchange. Now, it turns out there are alternative ways of creating validation mechanisms even in a decentralized setting. So for instance, the second most important cryptocurrency by market capitalization, Ethereum, will soon be switching its consensus protocol from the proof of work protocol, which is what Bitcoin uses, to something called proof of stake, which is going to be a lot more efficient in terms of requiring less computing resources. So it's going to be less environmentally destructive, but it is also going to be much more scalable in terms of the volume of transactions. Now, Bitcoin could also in principle move to a different validation mechanism, a different consensus protocol. But given that a lot of people have invested time and energy in setting up these Bitcoin mining operations that give them a chance of acquiring Bitcoin through participation in this validation process, and given that that might actually undercut the value model of Bitcoin, I think we will not see changes in that direction. But what Bitcoin has given us, which I think is really going to be its ultimate legacy, is the blockchain technology. So blockchain is basically Bitcoin's way of using distributed ledgers, that is electronic public ledgers that are maintained on multiple computers. And the Bitcoin validation process for transaction turns out to generate a great degree of security, and also the blockchain use of the distributed ledger technology gives it a lot of resiliency, because now you don't have a single point of attack. The Bitcoin blockchain has not been hacked, and it's going to take enormous computing power to hack it. Certainly there have been hacks of decentralized Bitcoin exchanges, but not of the Bitcoin blockchain itself. The blockchain technology, I think, is going to create a transformative set of developments in finance in terms of how we can create new products and services, how we can maintain, say, land records and many other public records and ownership records more broadly in a very open and transparent setting. We, of course, have non-fungible tokens as one example of how the blockchain can be used in different parts of the financial and even broader economic ecosystem. So that, I think, is going to be the legacy. And Bitcoin's value itself, I think, is continuing to be borne along by investors' faith. So at one level, I characterized it as a speculative bubble, but it's certainly one that a lot of people seem to believe in. But I will leave you with this one cautionary thought. There have been many speculative bubbles in history in the past that have lasted for a long time, that have brought in a lot of people, but many of them have ended pretty badly.
Absolutely, absolutely. Correct me if I'm wrong, Professor. But one phenomena that one can see around cryptocurrency is that a lot of the least developed or emerging economies and people there are increasingly adopting Bitcoin, either for trading purposes, for investment purposes, or even certain countries making it their own currency. The list of top 10 crypto adoption countries, I mean, more than half of them are actually developing or emerging economies. What is driving this phenomenon, or this entire penchant for alternate currencies? I mean, probably a deleniency from the dollar that probably poorer nations feel the need for compared to the advanced ones.
Yeah, in poorer countries, there is a range of motivations at play. These are countries where there isn't easy access to good financial assets. There isn't easy access to good low-cost digital payments that people have wide access to. In addition, even in some middle-income countries like China, there are controls on capital inflows and outflows in particular. So at times when the government is trying to keep capital within the country, a cryptocurrency, largely because it knows no borders, cannot be easily regulated by national authority, turns out to be a conduit for capital fleeing the country. And then there is the case of Ecuador, which has designated Bitcoin as the legal tender. Now, in countries of this sort, I think there is an attempt, first of all, to get away from what is seen as the hegemony of the US dollar, but ultimately it is trying to make up for failings of domestic policies. The reason why the Ecuadorian currency, the sucre, went out of circulation many years ago, although it's beginning to come back in circulation now. The reason it went out of circulation is basically because the government was running terrible policies with huge amounts of debt and printing lots of money to finance their debt. So the sucre very quickly lost value, and people in the country started using dollars as a medium of exchange as well, as a unit of account and even store of value. So for a country like Ecuador to adopt Bitcoin is at some level an act of desperation to try to get away from what they view as the hegemony of the dollar that they have stumbled into, largely because of their own policies. But I think there is another set of motivations at play here, which is, Bitcoin has been doing very well in terms of valuations. And I think the government might be making a calculation that if the government and Ecuadorian citizens were to acquire Bitcoin and the value of Bitcoin were to continue rising, that would certainly ease up the budget constraints on the government, ease up on the fact that the government is not delivering good services or creating an environment where people have good job growth prospects. But I think relying on cryptocurrencies in order to make up for domestic failings is not going to work very well. But I think there is a fundamental need that these cryptocurrencies are really meeting. And I mentioned stable coins, which have more stable value. Those, I think, could end up becoming very important in terms of providing a stable medium of exchange relative to the major fiat currencies like the dollar, that many countries around the world could start adopting, both in terms of domestic payments, but even more so in terms of cross-border payments. So many poor and developing countries rely on revenues that they get from their economic migrants who go overseas and send money back home. That process is painfully slow. You lose a fair chunk of those earnings in terms of fees. If you had a stable coin issued by, say, Facebook or some other private corporation that would allow you to undertake those transactions very quickly without a huge fee, that would certainly benefit economic migrants. So this is probably the reason why we are seeing a much greater take-up in the developing countries, because there is a genuine need, and there isn't a sophisticated private payment system that is available to fill in the breach.
Right, sir. Coming back home now, and here Indians have taken to cryptocurrencies like moth to light. India probably has the highest number of crypto adopters around the world. And this has all happened when there has been immense uncertainty around regulation. Now, recently, it seems that the government is open to regulatory approach towards cryptocurrencies instead of outright banning them. In your opinion, what should be the regulatory approach to something that has not been regulated so far anywhere in the world? We have seen certain instances, like probably in the UK, where derivatives have been banned, and etc., etc. But there has not been an entire model of regulation around cryptocurrencies. So how would you go about prescribing any ideas on this front?
So around the world, there is a range of approaches to regulating cryptocurrencies. China has essentially banned cryptocurrencies. Initially, China took the same approach that India did, banning its financial institutions that it regulates from undertaking any transactions in cryptocurrencies. But now that they are banned altogether, I think the use there is going to plummet. Now, of course, Bitcoin and other cryptocurrencies know no borders, but when the Chinese government tells its citizens stop using cryptocurrencies or you're going to face big penalties, I think that can have a pretty big detrimental effect. Then there are countries like the US, where there is some degree of regulation, and regulators are still trying to figure out whether to take existing regulations and twist them around so that they can regulate these new products and services, or come up with new forms of regulation. But even the very basic elements of regulation, or even having the Internal Revenue Service that collects taxes in the US, require that people in the US should report their cryptocurrency holdings, has actually given that industry some degree of legitimacy that I think it is benefiting from. And then there are some countries that have basically taken a hands-off approach. Now, at one level, one might say, so long as retail investors go in with their eyes wide open, even if it is a purely speculative financial asset, what role does the government have if people want to take on that risk because it's an asset that they believe in? So long as there is going to be a containment of those risks away from the traditional financial system, Why not just tell the banks don't deal with cryptocurrencies, but not prevent people from doing that? My concern here is that a lot of people are getting into this, taken in by the razzle dazzle of the new technology. And of course, when they see their neighbors, their friends, their children making large amounts of money by acquiring cryptocurrencies and seeing them rise in value, it's difficult to stay out. But I think for retail investors in particular, there is a significant risk involved in taking on these assets, which are very volatile and which, like I said, don't have any intrinsic value. Maybe if you're putting a very tiny proportion of your overall investment portfolio in cryptocurrencies, maybe you might say the risks are going to be limited. But I have seen around the world, including in the US and perhaps in India as well, people putting their entire life savings or even borrowing and putting money in these cryptocurrencies. That worries me a great deal. So from the point of view of investor protection, if not financial stability, I think the government does have an important role to play. In addition, I think financial literacy, making sure that people understand what they're getting into and not just get taken in by the technology, that is an important element as well. But in addition, I think the prospect of having, stable coins issued by private payment providers who are outside the regulatory jurisdiction of the Indian government or the Reserve Bank of India, or having these stable coins or other cryptocurrencies act as conduits for illicit finance because their use cannot be easily tracked. Those, I think, are very worrying issues. So I think some degree of regulation, even for those who, are strong proponents of the cryptocurrency industry, is going to be helpful. Now, there is the other issue about this new movement of decentralized finance that is being built on blockchains. As I mentioned earlier, there is this prospect of that ecosystem developing in a way that creates a broad range of new products and services that actually democratize finance. Now, that again is a very alluring prospect, but I have written in multiple articles that one has to be very cognizant there too, that technology is not the only solution. There are many vulnerabilities, not just technological and security, but even in conceptual design and so on, that one needs to be very cognizant of. So I think the reality is that regulation is coming, but it's very hard to think about how to position this regulation such that you don't kill off the innovation completely, but at the same time make sure there are no huge costs in terms of retail investors being extremely vulnerable or the spilling over into the financial system. And the final complication, of course, is that dealing with this regulation at the level of a country ultimately is not going to be that viable, because these are currencies, these are payment systems that ultimately know no border. So there is a lot of action already taking place at the international level, but I think regulatory coordination among agencies around the world is going to be crucial, and I hope India plays a constructive role in these negotiations, and I believe it has.
Right. So India is also, of course, while at the same time people are getting involved in the cryptocurrency space, the government itself has, mandated the Reserve Bank of India to come out with its own central bank digital currency. Now, an average Indian thinks that, what is the need for a digital rupee when I'm already most of my transactions are being done digitally, either through a payments app or through a credit card or a debit card. I'm not really holding cash. So could you help us understand, what could be the central idea behind having a CBDC like digital rupee, and what are the benefits of it as compared to, say, a tokenized form?
The interesting thing is that a CBDC is potentially a tool for financial inclusion that is relevant for many low-income and developing countries, and even in a country like the US, where the payment system is actually not that efficient. And, I can use Apple Pay on my phone, but I have to link that to a credit card or bank account, and about 5% of the population is unbanked or underbanked. So there is a need for a better payment system. Interestingly, China and India are the two countries where I think currently the user case for a CBDC is perhaps the weakest, because you have very good and easy access to low-cost digital payment that a broad swath of the population already can access, and I think more people are being brought under the net every day. In China, the central bank has made clear that it wants a digital version of the yuan, largely to maintain the relevance of central bank money at the retail level in day-to-day transactions, but more importantly, to make sure that that CBDC itself acts as a platform on top of which payment providers other than the big two, which is Alipay and WeChat Pay, can compete on a level playing field. Now, India through the UPI has already created this level playing field in terms of a payment infrastructure, and the payment system seems to be working very well in terms of access and in terms of efficiency. So the user case for a CBDC is ostensibly quite weak. But here too, I think a CBDC can act as an additional payment mechanism that people have access to. And you can also make sure that you maintain some degree of monetary sovereignty, because otherwise the use of the rupee may wither away. And given that the rupee is still the unit of account, in India, you want to have a payment system that is directly accessible through the central bank. So I think there are some advantages to it, although certainly much weaker than in other countries, given what India has already done in terms of the UPI. And one might also think about the rupee again as a backstop to the payment infrastructure that already exists, although my view is that the UPI is quite resilient. So in India's case, I think it's just bowing to the reality that if you want the central bank money to still remain relevant in day-to-day transactions, it's going to have to take digital form. So it just becomes one among a very large menu of payment options, but one that the government or the central bank has direct control over, which might be helpful in certain circumstances.
Right, absolutely. But sir, CBDCs, it seems that the biggest risk that could come from CBDC is to the present banking system. And you have in the past written a lot about this in detail. But the one thing that I want to understand from you, from the banking system's point of view, is that in this brave new world where digital currencies are prevalent and you have decentralized finance, as you mentioned, where does the banking system go from here? I mean, will 21st century mark the end of the banking system that we know today, or we have known for the past 100 years? Or do you see it evolving into a different sort of a creature?
That's a hugely important question, because if you think about money creation in modern economies, we think about the central bank creating the money that we use. But in fact, commercial banks are responsible for creating a lot of money in the economy. Every time a commercial bank creates a loan, it creates a corresponding deposit. So if you look at a broad monetary aggregate like M2 or M3, there is currency and coins in circulation plus short-term deposits in the banking system. So that's a really crucial component of money creation that fuels economic activity. So if commercial banks were to play smaller roles or even disappear, there are a number of things that we need to worry about. One is that a lot of deposits might then go into central bank digital currency accounts. And I don't think anybody, even the central bank, wants to be in the position of allocating credit in the economy rather than having commercial banks do the job, because they're much better at it, and having the government control in the entire allocation of credit is probably not an effective mechanism for credit allocation. The reality is that commercial banks now face enormous challenges, not just from digital currencies, but even from fintech intermediation platforms. If you think about the fact that there are fintech platforms that can more directly connect savers and borrowers without having to go through a banking system, that's a challenge. In addition, many traditional profit centers for commercial banks, including international payments where they collect significant fees, those are all disappearing. So many of the elements of banking are being chipped away by different forms of new institutions that are largely intermediated by technology. Now, in addition to the risks about credit allocation that I mentioned earlier, there are also financial stability considerations. We don't know how exactly these fintech intermediation platforms and the shadow banking system more broadly, that is the non-regulated part of the banking system, how that responds to actions by the Reserve Bank of India to control the expansion of credit in the economy. So monetary policy becomes a lot more complicated. When we had the financial crisis in the US in 2008, the ability of the Federal Reserve, the central bank, to pump liquidity into the commercial banks is really important in terms of preventing things from getting even worse. Now, the central bank in its role as a lender of last resort is well connected to the commercial banks, but how would it fuel liquidity into the non-traditional part of the financial system? These are all very big and open questions that I think are a real concern. But technology is giving us some ways to at least mitigate some of these concerns. The Bahamas has issued the world's first nationwide CBDC, and it's in the form of CBDC accounts. The Central Bank of the Bahamas has done something very simple. It's put a cap on the amount of money that can be held in a CBDC account by consumer. The cap is slightly higher for businesses. So you can't have a wholesale flight of deposits from the commercial banks to the central bank. Countries like China and Sweden that are experimenting with CBDCs are experimenting with a dual layer architecture where the central bank provides the payment infrastructure, provides the CBDC in the form of digital tokens, and much like cash right now, those tokens are essentially distributed by the commercial banks to businesses and consumers. So the CBDC digital wallets are maintained by commercial banks in parallel with their interest-bearing deposit accounts. So now the commercial banks can do know your customer functions and so on, and they still remain in the game. So this is not to say that the risks disappear completely, but I think we're getting to a world where through design choices, both conceptual and technical, we can mitigate some of the risks. But certainly for commercial banking, it's going to be a very challenging period in the coming years.
Absolutely. You touched upon one aspect of commercial banking, that is the international payment space, and you have very eloquently spoken about the prospect or the better chance that stable coins have of survival compared to Bitcoins and Ethereum, etc., etc. I wanted to understand, how do you see the blockchain technology behind Bitcoin, as well as the entire stablecoin ecosystem that is being developed, led by, say, companies like Facebook with their DM stablecoin? How do you expect that to change the international payment system going forward? I mean, do you expect more malleability in transaction, lower cost, more efficiency? How would that space develop going forward?
International payments is an area that is beset by huge impediments in terms of cost, time to processing, ability to track in real time. And this is one area where I think there is a real need for improvement, a potential for enormous improvements, and they are coming. You mentioned Facebook's DM, and certainly anytime a corporation such as Facebook or Amazon, which is very wide reach, can build a payment platform on top of its existing social network or commercial network, and given that that commercial network or social network reaches across countries and within each country and across the world has widespread reach, that is certainly going to be quite a game changer. Now, there have been many regulatory concerns about Facebook because Facebook has tried to argue that it's going to make sure that its stablecoin is going to be used only for legitimate transactions. But one can well envision a future where Facebook's stablecoin becomes so widely accepted that Facebook starts issuing its own unbacked currency, which would no longer be a stablecoin. The same is true of Amazon. Now, these are all closed systems, but one can also conceive of a system where these stable coins are able to transact against each other, which again would diminish the role of central bank currencies and existing forms of international payments, but would create new exciting opportunities for undertaking much more friction-free payments. Now, even setting aside stable coins, there are new technologies built on blockchains, such as Ripple, for instance, which is already shown with a proof of concept how you can basically undertake payment transactions across countries very quickly with practically instantaneous settlement. Now, these are not trivial challenges because, after all, anytime you talk about international payments, you have to deal with multiple currencies, exchange rate fluctuations, institutions across countries that may be subject to different regulatory requirements, that may have different technological protocols. And these are the sorts of challenges that have kept international payments from becoming more efficient. But I think we are at a point now where technology shows us a way how to solve this. And imminently, I mean, within the next 3 to 5 years, we're going to see transformative changes in international payments. Now, this is going to be very good if you're an importer or exporter or an economic migrant sending remittances back to your home countries. But it also poses some challenges. If you're a country like India or even China that is concerned about capital flow volatility, a problem that many emerging markets are subject to, you're now going to have many more conduits for capital to flow both into and outside a country. So management of capital flows and management of the associated exchange rate volatility is going to become much harder. And all of this also has one problem, perhaps not for the Indian rupee, but for many countries, especially smaller ones or low-income ones that have currencies that are not very credible, whose central banks are not very trusted. The possibility that their currencies essentially get displaced by digital versions of the dollar or the renminbi, or even a stable coin like Facebook's Diem, that is a very real and potentially scary prospect.
Absolutely. Professor, one discussion or one topic that has, sorry, my cat is interrupting the discussion. So, one topic that has dominated internet discussion forums and Twitter chats in the recent weeks is the whole Metaverse concept. And we have seen, Mark Zuckerberg present the Metaverse in the form, erstwhile Facebook as the new Meta and the Metaverse. I wanted to understand from you, do you think that digital currencies will probably end up being one of those building blocks of the virtual universe that we are heading towards? Not the virtual universe wherein you have a digital identity, but the metaverse wherein our digital self becomes of greater importance to us than our real self. And we have that cross section between the digital identity and the real identity of an individual. So do you see digital currencies as that building block that we are heading towards maybe in the latter half of the 21st century?
Now, even in those alternative realities, with what limited understanding I have of them, ultimately, economic incentives are going to play a role. You will need to have mediums of exchange, potentially stores of value. And the question is, what is going to be most viable in those environments? And one can well conceive of digital currencies of the form that are evolving right now playing a very important role there. So I'm not quite sure if there's going to be building blocks, but the reality is that anytime you have innovations, anytime you have people interacting, you need to think about incentives, you need to think about transferring resources across people, across space, across time, and ultimately that is the function of money. So I think it is inevitable as we start developing these alternate realities that we might or might not spend a great deal of our physical time in. We are going to need some form of money or the other. And the fact that we already have digital forms of money that have been built on top of social networks, I guess, shows us a map for how this might work. So it's inevitable in my view.
Understood. Because I have the opportunity to actually ask you this question, and I thought that there would be no other better person to probably get clarity on this. There has been a lot of discussion recently about quantum computing and how it can actually become a challenge for cryptocurrency or the blockchain technology. How much of a concern that should be for cryptocurrency investors or people who are investing millions and billions of dollars into creating this entire ecosystem of cryptocurrencies, only for another technological development to come and put all of that to risk? Do you think that it is a big risk for the space, quantum computing?
It could be a benefit if you think about undertaking decentralized verification of transactions in a secure way. Actually, quantum computing might prove to be a boon in terms of being able to connect up with technologies that can validate large volumes of transactions literally instantaneously and with a great degree of security and resiliency. But certainly it raises a question about whether something like Bitcoin, especially with its proof of work protocol that requires computationally intensive so-called mining operations, whether that will be undercut. Now, the state of quantum computing as it now exists and the difficulty of the numerical puzzles that are required by the Bitcoin algorithm to be solved in order to get the privilege of validating transactions, that's going to keep that ecosystem in balance for at least the next few years. But certainly one can envision a future where the proof of work consensus protocol and the enormous rewards it provides are going to be mitigated. Now, that may be a good thing. Bitcoin may ultimately end up serving its true purpose if it can move either to a different consensus protocol, or if the proof of work consensus protocol can be executed more effectively through quantum computing. But I think really the willingness of Bitcoin investors to pour money into this asset, believing it to be a safe asset for the long term, by which I mean the beyond the next, say, 2 to 3 or even 5 years, that I think is a worrying prospect for the reason you mentioned, the development of quantum computing, but also because we have so many other cryptocurrencies that are coming up that are just proving to be a lot more efficient in terms of providing value, in terms of providing services. So the Ethereum blockchain, for instance, is going to, I think, end up dominating because it has so much more functionality than the Bitcoin blockchain. And when Ethereum does move to the proof of stake consensus protocol, which was supposed to happen this past summer, and then it moved to the fall, it might happen early next year, that is going to really shift the balance. So whether pure scarcity can maintain Bitcoin's value, especially in the face of onslaught from developments in computing technology, from developments in other consensus protocol, that I find difficult to believe.
Right. Professor, my last question to you for the day, and I mean, through your book, The Future of Money, you have tried to bring to the world an image of what the future might hold for us as a civilization and for the money that we use and its various functions. But on a personal level, I would want to understand from you, when you look at the future, does it excite you or does it worry you on a personal level?
So there is, as with many things, a mix. I see the potential for decentralized finance and a broad range of products and services built on technology, blockchain technology, as really transformative in a fundamental and very exciting way. But there is an ironic legacy that Bitcoin may leave us. Bitcoin was meant to lead us into a world where there would be less dependence on the government or government agencies such as the central bank, where there would be less dependence on private corporations, especially major corporations. But in fact, the legacy that Bitcoin might leave us with is one where we are much more under the control of the government or major financial corporations in our financial and economic lives. If Facebook's DM were to start becoming dominant in countries around the world, Facebook has access to our social data, but potentially a lot of economic data as well. The same is true of a company like Amazon. If we move to a world where every payment is digital, ultimately those payments are going to leave digital traces. So whatever vestiges of privacy that we have left in our financial and economic and social lives might disappear. So there is a fine balance here between a world that could look a lot better in many ways and potentially one that is a lot more dystopian. And technology by itself is not going to solve all the problems we face right now. If you think about democratizing finance through blockchain technology and other new technological developments, that is fantastic. If people have access not just to digital payments, but to basic banking products and services for saving, for credit, and so forth. But given the very unequal financial literacy and unequal digital access we have around the world, we might make the existing inequalities even greater. So I think my whole view on this can be summarized essentially by the title of the last chapter of my book, which is A Glorious Future Beckons. Perhaps.
On that note, I would like to thank Professor Prasad for taking out time to enlighten us on this very complex issue. For more such insightful conversations and cutting-edge news, please keep visiting economictimes.com. Thank you and goodbye.